Hi, today is Monday the 31st of May and this is the weekly recap. Well, it should be a fairly short one since I did absolutely nothing last week. If we look at the trade log, as you can see, nothing has been done to this trade since the 13th of May. If you recall, I started reducing the trade a little bit more early. It was about 35 DTE. So towards the end of what I call the cruising phase, the descent is more or less around 28, where I start, peeling off the trade in preparation for the new trade. But in this case, I have plenty of capital available for the forthcoming August entry. So really, I had nothing to do. Delta is flat. My profit potential is about $900 times my small leverage. So on my PM account, that will be a fairly good month. At this point, of course, I've got so little theta, so I could just close the trade, but again, there's nothing much to do right now. I've started looking at simplifying the trade, maybe getting a few more cents by dropping the bottom combos here and ending with a IC type of trade. It would be something like this. I would get another $50. My delta would still be okay. If we look at the projection for the coming week or 2 weeks, as you can see, there's not much risk on the downside. So I could strip the trade a bit. It wouldn't have any capital effect, but really I'm tempted to do as little as possible and eventually close the trade. So I don't think I'm going to tweak to try and get more on this trade. As a matter of fact, on the PM account, when we look at the risk plus 10% on the upside, if I add 10%, yes, I would be in kind of trouble. So there would be probably more incentive about reducing the call side to reduce PM margin here. The downside at minus 12%, it's about 500 points. So it's 37, I'm still okay. So in terms of capital management, I would probably have to drop the call side or reduce it. And if I do so, I could maybe do a minor risk reversal. These call credit spreads cost about 20 cents. So it's still easy to get about 20 cents back on the put side. So that would be what I may be inclined to do. At this point, I run a corporate account on PM, as I said, and my overall PM, my overall margin to equity ratio is still low. I calculated last week, it was 25%. My mandate is to, at this point in the growth of the small fund we're trading, it would be 35%. So I don't even have much pressure to reduce the trade right now. So these are little technicalities which have nothing to do with the Rhino as such, but really nothing much to do on this trade. This is a good looking month. We did very little, so we didn't feed the broker as we sometimes have to do. So here is the July trade. On the July trade, I've done also nothing. If I can show you the trade log, but I also have done nothing since the 17th. And here I took a chance, in a way, to bet on slightly better negative delta and maybe aiming for the sweet spot. Now the trade is almost at its full potential, so I've been hesitating to add a little bit to the trade. If you've watched my recent videos, I try and spread my vigor risk. My call credit spreads for June and July are safe in terms of the IV skew, so they don't really give me any trouble at the moment. So I could, and at this trade, if I want to bump up the profit potential, a typical broken butterfly with or without an additional CCS wouldn't do much. If I just want to add a broken butterfly up here or even higher, it will probably be flat to give me like 30-40 cents maximum. When we reach a cruising altitude and the profit potential is suboptimal, an IC is more effective. An IC will probably give me more Vega, but my Vega is still fine. And as long as as the SPX VIX correlation is good, having more Vega risk on the upside is okay. So I've been tempted to put on a IC around here That would give me about 125, 120. Early last week, it gave me 1.6. So I'm a little bit disappointed. I should have done that a little bit earlier. But at the same time now, if we reach the full profit potential and the market doesn't drop to the sweet spot as I would like to, I may have to just feed the trade a little bit. It's a little late. 46DT is a little late to do that, but very often when volatility drops, you have to slow down. Everything gets slower, so you have to slow down, and the growth phase may be extended by a week or two. There's no strict rule, but generally high vol, you place your trade early and you just wait. There's generally not much to do. If volatility is low, you have to maybe feed into your trade for a little longer. So I may do that just to get some theta back, because I mean, if the market doesn't want to get back into some consolidation and get into the sweet spot, this trade will be just hanging there doing nothing. So that's my bet, that the market would retrace at least to test the recent lows. On the low of the trading range is around here. I mean, that would indicate that yes, we're not far from the sweet spot. At the same time, this low vol, this 1 or 2 weeks, 3 weeks of calm, I've given my trade its full potential, so I'm a little bit earlier than anticipated, so it's not too bad. Another possibility at this point would be to just close the trade and maybe start a July month-end contract, or just put more money into August but the August entry, if volatility stays low, it's not going to be great. So I mean, but that I will update you on Slack sometime this week. I may even delay if I see that the market is is hesitating and may go on a vol bump and tentative consolidation. That may be a good timing for the August entry. But I may go slow as I've been in a lower volatility. So really not much to say. I'm almost surprised this video is already this long for so little to say. I hope you get my line of thinking through these videos. And again, if you wish to come to the Slack group to discuss these trades. Thank you for watching, and bye for now.